Hello, everyone. Welcome to another episode of Punch Card Investing. Today, we actually have an all-American crew since we're missing a few of our other typical members. But thankfully, Jason with the After Dinner Investor is here to help us out with this episode. We're going to be talking a little bit about what we're thinking about buying in the stock market right now, kind of like a watch list sort of thing. What's on our radar right now, since that's obviously very relevant, always a relevant and popular topic to get into, since it can be a good way to think of new ideas, challenge existing ideas, and all that good stuff. But before we get into that, be sure to smash the like button if you haven't already, and subscribe so you don't miss any future episodes, since we put out new videos every single week at about the same time, right about now, wherever that is for you. We have, I think, 30% of our audience is US. The other 70% is everywhere else, which is pretty awesome. So we have a very diverse audience in many time zones, I am sure. So without further ado, let's get into it. Anyone want to throw a stock idea out there? Jason, since you're our inaugural, this is your inaugural episode, why don't you give us one of your ideas?
Well, thanks for having me on, guys. First, let me say that. Big fan of the show. Biggest fan in the chat. We all know that.
And undisputed king of the chat.
Well, before we get started, Jason, you should let us know what you had for dinner.
For dinner, my wife cooked tonight. We had baked penne with hamburger and meat sauce inside of it. It was excellent.
Sounds delicious.
Had some roasted vegetables with it. And then for dessert one, you guys saw I'm on an apple before the show here. And we'll see what's coming up after the show. So
we'll see.
Well fueled up to go. Dreams come true. I made it from the chat here.
Jason, where are you from, by the way? Like, where are
you? From Oklahoma City.
Okay, yeah. So Midwest. I'm in Chicago, so we got the. Is that a West Coast time, or is that still?
I'm Chicago time. Yeah, every time I give out my time, it's Chicago's the main city in Central Time Zone. So yeah,
fantastic. Nice. All right, let's hit it.
Okay. So I'm thinking of buying. There's actually 4 I'm very focused on. And then, of course, what I own, I'm always looking to maybe buy more of if the prices stay right. And then there's a couple maybes. But I want to start off of the 4 I'm focused on. The number one, just to start off with one, the number one stock that I want to get my hands on that I'm thinking about buying, I think I'm pronouncing it right. Brad can correct me. Rhesus. From Turkey?
Yeah, Rhesus. One of the rise most bullish stocks, it sounds like.
So if I'm not mistaken, this is about 100 million cap company in Turkey. It's a warehouse and logistics company. If I remember correctly, they've got tenants like Amazon and kind of, I think, blue chip tenants. They are in Turkey. There's a lot of concerns, of course, with investing in Turkey, inflation, regulatory issues, stuff like that. But this would be a clone of Monish. I don't know if he's ever come out and said this is that company, but if you look at ticker, this is a Turkish company in his portfolio. On the last, or I think it was the last video on his YouTube channel, it was around August 5th, the Value School Spain Q&A, and of course Brad just did a recap of that. I think about the 20-minute mark, this really stuck out to me. I was taking my dogs out late at night, getting ready for bed, doing some dishes, and this really stuck out to me. He said, if I have my numbers right here, he said he bought a Turkish company for, and again, I think it's racist. He bought a Turkish company for 20 million. That was the market cap. When he said the liquidation value was 500 to 600 million. So he buys it for 20. It's worth 500 to 600 liquidation value. He says since then, the market cap is now north of 100 million. Pretty sure that's where Rhesus is. But the liquidation value, he said, has grown to 800 to 900 million. So this is why I want to get my hands on this stock. It's a clone of Monish. So that's like number one. And then to go on top of that and make it even more attractive, I've got Monish Pabra. He's not naming it, but I'm pretty sure I have the right company here. He's saying it sells for 100 million, and he's not saying it's worth 800 to 900 million. He's saying the liquidation value is worth 800 to 900 million. And to me, I there's nothing else I see out there that's like that undervalued. So I want to figure out how to get my hands on it, and that's the number one stock I'm thinking about buying.
Yeah, right now it's per ticker in dollar terms, it's at about $120 million market cap. So that's probably what it is. And the liquidation value wouldn't factor in growth, which is what you're getting at. So if you're factoring in growth and like a discounted cash flow model or whatever you're trying to do, you're going to obviously build that into the price. But if we're just talking about liquidation, if they had to sell everything today, then that certainly would be attractive. My question would be how to actually value Turkish real estate. Like, what is the Turkish real estate market like? Is it significantly different than your more, traditional real estate sort of market? Is it same old real estate, just like anywhere else? That would be my question for it.
Well, Jack, I mentioned that it would be a clone of Monish, but I didn't use the magic word yet. Shameless clone.
Yeah, right on.
I'm shameless, so I don't know how to value real estate in Turkey, but I'm a shameless cloner, and I'm also someone who likes to play the probabilities, play the odds. And I'm reading Richer, Wiser, Happier by William Green, the new book that's out. And in the intro, there's a lot of talk about like, hey, no one knows the future for certain, but a lot of these guys, they play the odds. They put the odds in their favor. And if I'm looking at it as an odds player here, I've got a Monish clone. So you look at his track record. And also, I would say Monish in his prime. Like if you've been watching his videos lately, I really think he's it seems like he's dialed in and really he just impresses me when he talks about where he is as an investor. So I'm doing a clone, or I should say very likely it's a clone. And then we've got this liquidation value. If I wrote this down correctly and heard it correctly, 8 to 9 times higher than the price of the stock. You layer on those things, that seems like a lot of odds in my favor that it would work out versus betting 5 to 10% on it. I feel like the reward there is worth the risk. So that's how I'm kind of looking at it, knowing that I'm not an expert in Turkey, knowing that I don't have the skill set right now to value Turkish real estate or to judge managements and all that kind of stuff in Turkey.
Yeah, Pabrai has talked about it as being this kind of weird combination of deep value and long-term compounder with a great capital allocation team and the management. It seems to me like this is the company he's talking about. My big question, there's people who are asking in the comments, have you looked much into how to actually buy this company?
Well, I've got something written down on my notes here. It says, challenge stock compounder Brad Kellner. I'm going to challenge you here tonight.
Oh, boy. Wow. We didn't know this was coming. This is real time.
As you and I both know, in the most recent Monish talk at the Value School, someone asked him, hey, Buffett says he can get 50% a year. How can you possibly do that? And Monish's answer, to paraphrase him, was, if it's your desire, if you really want to do it, if you really want to compound money at 50%, you'll do it. And so at this point, I really want to get my hands 5 to 10%, maybe 10% is a little scary, but 5% to start maybe. I want to get my hands on Races. I really want to do it. So I'm going to make it my business to go out and figure out how to do that. I've done a little bit of research. It's a little bit discouraging for sure. Where you start looking into it. So far, it seems like so my hope is that I can get a banking relationship with a Turkish bank or an American bank that does business in Turkey, and then have them buy these securities for me. That's my hope. That's the only possibility I've seen. I just started researching this week. That's what I'm going to try to do. And my challenge to the great stock compounder is, I know you want this stock as bad as I do. I think you and I are probably the two people in this world that want this stock who don't have it the most. And so I'm challenging you. If there's a will, there's a way, as Monish says, and we're going to figure it out.
Sounds good, man. Well, we've got a lot of interested people as well in the community.
Put together a fund.
We can put our heads together. Yeah, I wanted to ask you one more about Races. So someone mentioned there was a dilution event in April. You may have noticed the stock went down by like 50% or something. Have you looked into that? Are you familiar with that situation? I didn't really take a look at it because I just kind of pushed Races aside, thinking, I can't buy this thing anyway. So,
I have not looked at that. I do know that recently there was like a big drop in the stock price.
Yeah.
And to me, if seeing Monish the way he talked about what we think is this company just recently, and then we get a drop in the stock. It looks attractive to me, and it's just one of those situations where, you know, I'm an investor in Apple when I'm that's partially a clone, but it's very much in my circle of competence. With Apple, I'm judging every situation that comes up. I'm judging the management. I'm judging every quarter, that kind of stuff. But with Races, it would just be a pure clone, a pure shameless clone.
Yeah.
And so things like that, I don't really, I'm not really sure what's going on. And for me, I'm comfortable putting 5% and kind of holding it that way, knowing that, hey, it's a clone hey, it's a likely clone. And let's see what happens with it. So that's how I kind of look at holding those clones that are just like, you know, here's my circle of competence, and then this thing's on Pluto. It's just, I can't claim that it's in my circle, but you know, to me, I'm playing the odds, and I do like the idea of it. It's just a matter of figuring out how to get our hands on it.
Sure. Obviously, Pabrai figured it out. So, real quick, do you want to throw out your other three? You mentioned 4. I don't want to leave everyone hanging.
Well, and we can get into them when there's more time, or whenever you guys want to. But Alibaba's on the list. I ended up making a 12% bet just recently, and for me, there's a little bit more room on the table. I think I'd be comfortable going up to maybe 15%, if maybe a little higher than that, no more than 20. But maybe closer to 15 if the stock price just keeps dropping and our super investors keep holding or buying more. We're looking at Charlie Munger, Monish Pabrai, Guy Spear, buying it in Q1 and Q2 of this year. The low in those quarters, 223, 206. Right now it's selling for 189.
Yeah.
So, and it's just one of those wonderful businesses. And I know there's a lot of concern about the regulatory environment, but my plan is to coffee can it, to legitimately just leave it in my portfolio, try not to think about it too much, watch the super investors, and then just hopefully wake up 10 years from now, 20 years from now, and maybe some magical things will have happened. So I'm keeping an eye on that. And then the last two would be clones that I'm kind of getting comfortable with and learning about. There's an investor from, I think, the Boston area named David Abrams, and it's a clone of his, a company named Change Healthcare, and it's kind of like a technology partner in the healthcare industry. So I'm kind of looking into that. He's bought it in Q1 and Q2. And then a big one I'm very interested in, I've already put a 3% bet on it, and now the job is to figure out if I want to go to 5 or 10%, but that company is Cardlytics. And that would be an idea I cloned from Cliff Sosin. Yep. And I had never heard anybody talk about Cliff Sosin until I just randomly found him when I was kind of into Party City and trying to learn about that. And he's a guy who, he might have the best track record on Wall Street in the hedge fund industry in the last decade or however long he's been going. Just amazing results. And he has bought, and by the way, Cardlytics it's a marketing platform. And as I understand it, it partners with like credit card companies, Cardlytics, and it partners with credit card companies and banks, and it goes into their app. And a section of their app makes offers to the app users, like, hey, go to Starbucks, hey, go to McDonald's, just to use a couple of random names there. I'm not sure if they're in there, but they look at what people spend on their credit card, and then they make timely offers to those individuals in the banking and credit card apps. And and they can measure results like down to the penny. He bought it in the Q2 of 2019 at $15 for about 14% of what we could see in his portfolio, in his fund. He continued to buy every single quarter for the rest of 2019 and the rest of 2020. Did not buy in Q1 2021, did not buy in Q2 2021. How do I know, or why am I cloning him now? Just in the last few days, we have a 10% insider report filing where he increased his stake by, I think, about 14%. At about $87 and $88 a share, currently selling for $80. And that's a company I've made a 3% bet on, pure clone. But it is a company that I do believe I can get inside of my circle of competence. It's an industry I know well. And I'm going to be studying this company and possibly making a kind of a real bet on it. So that rounds out the 4 that I'm really focused on right now.
So would Cardlytics be? It's not really a credit card company. It's more of like a
Ad platform within
yeah.
financial.
It's an average, and I mean, how beautiful is the word platform these days? We all know that's where the money is. But it's an advertising platform where a little section of like a bank's app says to their user, hey, do you want this offer for coffee? Do you want this offer for food? And it kind of connects those uh, companies that sell stuff to the public with the banking and credit card apps, and it's like tailored to the user based on their spend history. And there's some good interviews out there where he talks about this company, and I haven't watched those in a while, and part of my work now is to go look at those and get up to date with the company. But if I remember it correctly, my memory is it does things maybe not this, but maybe like this, like, hey, this person gets coffee at the beginning of the week. Most weeks they haven't gotten it in a couple of weeks. What if we send them a little reminder and bring them back into our coffee store? Then they'll start coming back regularly. So we can give them a deal today. They're primed for it, and then we can keep them coming back. So stuff like that.
So is it their data or is it the bank's data then? You know what I mean? Like is the bank sharing data with them, or are they collecting it directly with the bank's permission?
I don't know for sure, but my bet would be that it's the bank's credit card data, and they're sharing it with Cardlytics, and then Cardlytics is working with the retailers. So, but I think to get that data, they have to get it from the card companies.
Right. Of course, they need permission, and part of the reason I asked that is it seems like that would lead to some pretty serious vulnerabilities in that they're kind of riding. They're taking advantage of whatever the banks or credit card companies will actually give them, and they could easily take that away and start doing something themselves. Not saying that would happen necessarily, but that seems like a pretty large risk when we're talking about like a moat or like a long-term sort of shield that could help that company compound over the long term. Have you given that any thought?
No, because I haven't thought about that, just because I see this industry up front a lot, the digital marketing, and I read a lot about Apple, and there's just so many, like if you start thinking that way, there's so many privacy vulnerabilities to be worried about. So I just look at it like, hey, this is their business. They're not in taking the data business. They're in the using the data business to benefit all parties. So I wouldn't be too concerned about that. And another reason why is they work with some really big banks, like just the biggest banks that are out there. And so if those companies have done their you would assume they do their due diligence and that kind of stuff and have checked them out and feel comfortable with them.
Sure. Yeah. I'm not saying it's likely, but it just seems like a pretty significant threat that probably should be evaluated. But if you say you've like been around the space, like, is it from like researching companies like that, or is it part of your career?
Well, yeah, my day job is I run a digital marketing agency, and so I work for like a lot of small and medium sized businesses around the country, and I'm pretty plugged into that stuff.
You're all into the ad analytics and all that sort of stuff, because it sounds like that's really all it is. It's just taking some data and being like, hey, you do this a lot, you fit this population, now we'll send you basically an ad.
Yeah, and it's similar to a lot of the marketing I do, where I always hesitate to say, the person who's doing stuff online or what they're spending their money on. And it's not, the reason I hesitate is because it's not that the person. Like, they don't care that Jason Rothman, the after dinner investor, spends money here or does this stuff online, but they know basically what this little user does. And if you think about like some of the possibilities with knowing what people spend their money on, and then if I understand it correctly, sharing that information with brands, instead of just running a TV ad saying like, hey, buy our coffee, and spending all these millions of dollars and not knowing if it really worked. Sure, you can keep doing that, and that's for like brand awareness and all that, but you can also now target people who like, hey, this guy buys coffee every Tuesday morning. He hasn't bought it in a few weeks. What's going on? Let's offer him a free coffee, bring him back in the door, and that free coffee is going to pay for itself, because now he's going to start coming back on Tuesdays. So you can almost like get it down to the individual. That's my recollection of the company. I need to dig into it. But knowing the online marketing industry, knowing marketing in general, I think there's real value there being able to measure being able to measure the results. And I think that's a huge thing. The thing I'm going to be curious about is, what is the competition like? If a bank,
that's my big concern there, just because of the moat we were talking about. Is it really a moat, or is it just kind of like, could anyone do this? We have some people in the chat mentioning like, what's stopping Facebook from doing something like this? It's very similar to their model. It's just in a slightly different space.
Well, Facebook, I mean, I hope that they don't have this information, but I don't think they know what we spend our money on if we don't go through any kind of Facebook platform. Now, I know there's things like, say there's some kind of financial app you use on your phone, and then that thing that pops up that says, oh, don't create a password, just sign in with Facebook, we'll make it easy for you. Well, I'm sure those companies talk to Facebook, and then that helps them like figure out like, oh, this guy buys investing books, he's into investing. And then when some person comes out with a course or something and wants to market to people who are interested in investing, I'm probably on that list. So I'm sure Facebook is into this to some extent. But that is a good question. Like, who is the competition? But the interesting thing is that, as I understand it, banks give, to get into your world, Jack, they give square footage in these apps to these offers. And so that seems like a really tight-in relationship there. And maybe that's where the
what do you mean by that? They give like a portion of their data? Like
no, like in the app screen on the phone, like they're inside of the bank's apps. So you open up your bank app on your phone and you get hit with these offers again, as I understand it. And if you think about like an app, there's only so much space inside of the app to put these kind of offers.
Digital real estate.
So maybe that's where some of the moat comes from. But that's a really interesting thing I need to investigate, is like, why are the banks going with this company? Maybe it's the amount of data they have. Maybe it's what they do with that data.
Yeah, that would be the only moat, in a similar way to like a Facebook or a Google, in that it's just software. Like, anyone can create software, but what changes is that they get this runaway effect of having so much data that like it's almost impossible to catch up with them at a certain point for a particular
like a virtuous cycle. And hopefully, I'm hoping that's what's going on. Based on the investing activity of Cliff Sosin and how I've heard him emphasize the importance of moats in some interviews, and how I've heard him really, like, because he's into Carvana a lot, and really the way he thinks and talks about businesses 5-10 years out and even longer, and thinking about investing that way, I would suspect that some of this stuff is going on with Cardlytics, and somehow they do have a moat in there based on just him being disinterested in it.
Jason, as someone who's well versed in online advertising, I'm curious if you're an investor in Facebook. I've seen how powerful their ad product is. What is your take on that?
I've never invested in Facebook. I have invested in Google at times in the past. With Facebook, it's one of those companies where I do see the power of their advertising, but there's been other things that I could be in, like Apple or like Google, where I like their moat better. I like their advertising better. And there's also been times where Google, quite a few years ago, was actually seemed like pretty cheap. And my circle of competence is stronger there. With Facebook, I've never like looked at it and gone, oh, that's cheap, I'm going to buy it. And just in the last half year, maybe year, we've seen some of our super investors buy Facebook. And so I've thought about cloning it, but I've just never gotten around to it. And then I know I think you're big on this, Brad, of just like being in things that you're interested in. And social media, Instagram, that's really not something that I'm interested in. And so it just hasn't attracted me the way some other of these platforms, when people are buying them and I'm cloning, or I see them cheap, like those have attracted me. So it's kind of been on the periphery. There was one time where I should have bought it for sure. And being the investor I am now, I think I would have, but that was, I think it was 2016, but it was when they had this big issue with the election, and people's data was being misused, and this Cambridge Analytics company, Facebook really got beat up then, like really beat up. And And then if you think about it, so everyone was mad at them. Hey, what are you doing with my data? Hey, why are we living this way? Blah, blah, blah. I'm so mad. Next morning, you're on Facebook with your head staring at the floor, because everyone's addicted. So that should have told me, like, man, this was the time. So I missed that opportunity.
Yeah.
Those were kind of my thoughts on Facebook. Brad, have you ever been in there, or Jack, Facebook?
Never owned Facebook.
I did when I was doing more like passive style, like just kind of buying a basket of everything. But I've since actually, do I still have a couple $100 laying around that I just never sold off because of tax consequences?
What a flex right there. Do I have those Facebook shares sitting around?
No, I do. I probably do.
A couple Benjamins sitting in Facebook.
But I haven't looked to buy again since it's had its massive run up.
Jack, what does $100-$200 really mean? Is that code for something larger?
No, it's not. It's small. Okay. That's it. It's under 1,000 if it's anything, for sure.
How about
while we're talking about data, though, Wiser and Happier here puts a good question. I think this applies more to just Cardlytics, applies to really all kind of data oriented ad companies. Is Cardlytics adding value to society? I understand how Alibaba's ecosystem is adding value to the Chinese economy. So what about Cardlytics? I want to take a quick stab in that. You could make a similar point to all advertisers. What are advertisers really adding to society? Because that's really what this sort of platform is. It's providing very tailored ads to people based on their credit card history or based on whatever, if you're talking about any data company. And the value is that you're getting a product that a person is more likely to want more directly to them. So it's a more efficient process. At least that's how it should go, as long as you get enough quality data. And I would argue that that's definitely positive, and that there's less marketing waste. The marketing is a lot more efficient, pointed. There's obviously cons to that as well, in that you could get a feedback loop where people start seeing all the same stuff and are not really getting as much variety. And you could argue that that's bad for society. But just from a business perspective, that's the value I see in pretty much any sort of company that relies heavily on data like that for advertising, and that it's getting whatever product to the actual targeted audience more efficiently than before we had this sort of data tools at our disposal. Well, what are your thoughts on that? Is Cardlytics good for society? Is it adding something?
I understand the instinct of, like, again, I haven't looked into it. So where I'm speaking about the company here, this is based on my recollection, but I haven't looked into it yet again. But I understand the instinct, like, if it's based on what we spend, where that's a privacy thing. But in terms of like the scale, I'm not concerned about that at all, because, if we were talking about social media or something, and I was trying to sell you guys on the value to the users, and I was saying, hey, look, it connects us with our neighbors, I think that's pretty clear. That would be kind of like a stretch there, because there's a lot of negatives with someone seeing where you spend your money and then offering you deals based on you. I see how people are concerned about it, but as far as the user goes, this guy in our hypothetical, he's getting a free coffee at a place he likes to buy coffee. So what's the harm in that? It doesn't seem, you think about all the advertising we all intake every day. It's an accepted industry. We all accept advertising in our society. And if you're going to make offers to people at places they like to go, I'm not concerned at that in terms of like ethical things or anything. And I think it is, it's not like it wouldn't like change my life to get a free coffee, but you could say it is kind of value adding to the consumer in that way. Now, I'm just thinking of a threat here, with all this talk of privacy. Apple just changed something on their operating system, like telling you have to opt in now for apps to track you. And that, I think that's affected Facebook's business to some extent. I could see a world one day where maybe Apple comes around and says, hey, you know what? We're the privacy company. We're the convenience company. Just do all your payments through Apple. We'll be the new payment platform, and we'll encrypt and anonymize your data. Maybe that's a threat to their moat long term.
I think that's a good point. If people really don't like not having privacy, then they'll go to something that offers privacy. And we'll see what happens long term as people kind of understand what's really going on behind the scenes a little bit more than maybe they do now. But I think that's a fair take. Brad, anything else to add there?
Yeah, I mean, we could go down a rabbit hole on what
Definitely.
actually offers value to society and to
For
the
sure.
individual. I don't really want to go there right now,
Yeah,
but it's an interesting question.
All right, then. Speaking of value, what do you got? What sort of targets are you looking at right now?
What am I looking at? Well, about half of the 13 Fs from investors that I track came in today or recently.
Yeah.
So I'm
by the way,
swimming in the 13 Fs. Don't worry, I know we're going to do the next one on 13
next
Fs.
week,
Is that what
we're
you're
going to do a
saying?
nice 13F
Yeah.
breakdown like we did last quarter.
So
So
hard
tune in
for
for
me to
that one
hold
next
back.
week.
It's so hard to hold back.
Yes.
So Sprouts Farmers Market has kind of popped up on my radar as something to dig into from Phil Town.
Yeah.
Alibaba, I could add more to that, similar situation as Jason. And then Micron kind of is resurfacing. It's dropped a bit recently. Seth Klarman increased his position in Micron. You know, it's Li Lu's biggest holding, and obviously Pabrai's biggest holding. So I'll probably make a video about Micron this week, but I'm thinking possibly add more to that. So those are some of the ones I'm looking at.
Can I jump in there, Jack?
Go ahead.
Brad, that was on my list today. I've got some more notes. My notes are very interesting. You come up in them a lot, apparently. I have game plan on Micron Technology. That's one of the two maybes, because I also saw that 13F today, where Seth Klarman increased his holdings there, I think by about 32%. Yep. And it says game plan. It says maybe, not sure yet. Brad, what do you think? So, Brad, you're my Micron expert here. It's down to $71. You want to give me like just a couple sentences on what the company does, and what I'm interested in is what could the outcome be here? Is it just that it's undervalued and the price will pop up, or are there like long-term trends with these chips or whatever? Because I hear a lot about the chip shortage. I've been trying to buy a car recently, can't get one, like literally just can't get one. Have to buy it a month out. And every time I hear chip shortage, I think of Micron, and maybe it's a good spot to be.
Yeah, well, yeah, the way I look at Micron is like a pick and shovels play on the digitization of everything, right? And I watched a really thoughtful presentation through Manual of Ideas. I could try to get that to you, Jason. But yeah, the big argument with Micron from that particular investor, you know, they're going to be getting very heavy into share buybacks, and he was kind of projecting free cash flows to grow very aggressively over the next 4 years, where, you know, by 2025, projected free cash flow is around $27 per share. So if you think, you know, maybe a reasonable multiple on free cash flow, like a 10x, that would be a $270 share price. So from 70 to 270 over 4 years is quite compelling, you know, if you kind of kick the tires on his framework there. But yeah, it's a pick and shovels on a lot of different industries that have huge tailwinds, as I see it.
Does it sometimes with investing in like even life, sometimes things are so like obvious or crystal clear, or they seem like kind of no-brainers. I would go back to Monish's talk where he talked about that, forget the name of it, but the company in the Netherlands that has the stake in Tencent that's like selling for a big discount. Proces. Yeah. In like that situation, I think the wording was like the market just gives it to you on a platter or something like that. And that one, I've stared at it and I'm like, wait, okay, so the Tencent, good company, blah, 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 but it's worth this much. You can buy it through this company for this much. And then I have this little weird brain thing where I'm like, no, it's too easy. Must be a trick or something. And I stopped thinking about it. I've always kind of thought maybe I'm doing that with Micron. Like I'm overthinking it. Like this stuff's in big demand. I don't think they have a debt problem or anything like that. A lot of people are projecting a lot of cash flow. It makes sense with the trends of what they sell and the shortages for that and the moats. Maybe it's just as simple as it sounds. Can it be a very simple situation?
I think it can be. I think so. Investors who owned Micron in the past, like a number of years ago, a lot of them got burned, right? Because there were more players and it was really just this commodity business. So I think it can be difficult for people to kind of see a new story for a company, even when that's actually what's happening. There's a completely new environment that a company is operating in. So that might be part of it. I don't know. That's just speculation.
I've been in some oil companies that have very active and up and down past. And I have also, that's something I've come to myself with investing. When a business has lost investors a lot of money, meaning the share price is down, maybe it could be a totally different company with like different management. It could be in different industries. It could be a total turnaround. They could have bought other companies and now those are like the main part of the company. And a lot of times it seems like these companies where people have lost money carry a stigma, like with the online investing community.
I mean, it hurts, right? To lose money.
People, it's like ex-girlfriend kind of stuff. People are so mad at these companies. And it is interesting to hear that that could be going on with Micron a little bit.
Yeah.
But yeah, I think I might be taking the plunge soon, just based on the Seth Klarman buy at these prices, knowing that these great other investors are still in the company to very large extents.
Yeah, heavy positions. So yeah, those are a few things I'm digging into. Oh, we lost Jason.
Jason says he has to step out for just a second, but
cool.
he'll be back he'll be back shortly.
How about you, Jack? What are you eyeing up?
That I just got to say that was a nice mic drop there, but
it really was. That was great timing. Yeah,
but he'll be back in just a second. What am I buying? Well, I mean, I just probably put like 20% of my net worth into a property, so
all right.
Counts? But,
a private deal.
Yeah, private off market or not publicly traded deal. So once I finish all the rehab into that, I mean, between my current residence, I mean, and now, and then the one we're about to move into, it's probably putting in about 10 grand into both properties total, just to like spruce them up and add a little bit of value there for the next renter here, and then for the eventual renter that we'll have in our new place. But beyond real estate, I'm looking for more deals all the time. I'm thinking of a few. Number one is that one you pointed out a few weeks back, Brad, FRP Holdings. That's that real estate development company that owns a bunch of
gravel
pits, and then also has some nice multifamily development. Sure. It looks very enticing, and the price hasn't really moved much since since we had that episode where you talked about it. So FRP Holdings is like number one on the watch list right now, just to dig into more. I really haven't in the last few weeks because of the deal I just went through, and that's been taking up pretty much all my free time. We're going to complete our move this weekend, which will be great. So that'll be behind me. We just finished restaining the floors yesterday, so we haven't been able to do anything. So they look great, though. I'll have a nice video on that coming soon.
Jack, I subscribe to your YouTube channel. Sometimes I don't know if I'm on CNBC or HGTV. It's investing stuff, and then I see you in the houses. I love it, though. By the way, I saw you in the new
take
house.
That as a compliment. I appreciate it.
I love the mix up there.
Yeah, I like real estate too much, and I'm also doing it, so I try to just show whatever I'm doing. So I appreciate that. But FRP Holdings, that's one. It's in what I would assume is my wheelhouse of real estate. I don't want to get too cocky though, because I've never done rock pit development.
One quick question on that one, Jack. Is there a particular aspect of FRP that kind of jumps out at you that makes you interested?
I think it's the free lottery ticket sort of thesis, in that you're probably getting the whole portfolio besides all the gravel pits as at fair value, or it would at least seem like. I haven't done much digging because I want to really see each property specifically, and I haven't found like an easy resource on that. So it looks like you got to do some pretty significant digging to find it. So if you buy that at fair value, then it's like you're getting all of the rock pits for free, and that's a lot of land, and that's a lot of gravel too. And then there's also the added lottery ticket of once the gravel pits are expended, those can be turned into nice developments in some places, which is pretty neat. That's some serious added upside as well, potentially. So that's kind of the thesis I'd be looking at it from. What is the fair value of all the easy to understand stuff, the multifamily? Just look at the cash flows and take a look at that, and then compare that. If you're getting that at a good deal, then you get all this other stuff for free. And That's certainly an approach that someone like Peter Lynch would advocate for heavily. Trying to find that free element. I think the big element he talks about the big example he talks about in One Up on Wall Street is the Pebble Beach golf course, in that it was almost like you're getting the golf course for free, and when you're buying like the actual underlying stock. I forget which stock it was exactly, but that's just an example. Something like that.
Cool.
What about you, Brad? Have you done any more digging into that one, since you're the one who found it? So
I haven't. I presented it, and I'm waiting for you guys to come back to me with incredible insights on this. Right?
Yeah, I'll get to something soon. Once I move in, I'll finally switch gears a little bit back into normal researching.
Sounds good.
But that's one. Number two is one of my current holdings, kind of like what Jason prompted with earlier. Take a look at what you already hold, because if you liked it enough to buy it once and you're at a price that's attractive, why not buy it again? So Turtle Beach is one I bought some months ago. They're like a gaming headset company, and they do plenty of other gamer gear as well. And they're constantly trying to buy new assets in that space. Like, think maybe like keyboard and mice companies, microphone companies. So whatever it happens to be within like that gaming niche, they're really trying to expand out of that, because they have basically no debt, throwing off a ton of cash right now relative to their size. So it's just from there, that's already like a good place to start.
Sorry, did you say this was Turtle Beach, Jack?
Turtle Beach, correct?
Yeah.
And
another one that I brought to you.
It is that was brought to you by the Magic Formula screen.
It's true.
I think it's still on right now. It went off and then came back on. They just had their quarterly earnings and still look strong. The only difference is it's well above my cost basis, which was, I thought, quite undervalued. Now I'd say it's probably pretty close to fair valued if you're assuming like a 15% discount rate, which is pretty high. It's close to that. At least based on my projections, not financial advice by any means. Do your own assumptions whenever you're doing any of this stuff. So that's one I'm looking at pretty closely, potentially adding quite a bit more into once I have some more cash coming in after I finish these light rehabs.
Can I just say, Jason, you mentioned Cardlytics with Cliff Sosin. I love when an investor can buy in at 14 and then continue buying as it goes up like 5x.
Well, Brad,
there's something really cool about that.
And on the flip side of that, he bought into Party City, I think around $5 or something like that. And then the coronavirus happened, and Party City, and also there was a helium shortage, which is a little bit smaller thing in the world, but those two kind of hit together with Party City, and it went from 5 down to, I think, 42 or 48 cents. Ooh. And he did buy all the way down, and he bought all the way up. And so I know he's made massive gains on that since it's come back, and he bought again on the way down and on the way back up. And so whatever that muscle is to not deal with the anchor principle problem or whatever it is where you're stuck to a price, he can do it when it's going up, and he can do it when it's going down in a extremely impressive way.
To be able to have that conviction that you understand what the business is worth, regardless of what's happening with the market price, right?
To that, this is kind of like a test and anchoring bias for me, because I so far I'm so good. I'm up like 30 something %, which is nice in half a year. So like that's a good start, but I'm trying to look at it again. All right, things have been going pretty well for the last half year. What's going on? Is my thesis unchanged right now? I think it is. They're continuing to try and acquire more businesses with the cash they're throwing off, diversify away from headphones a little bit, but still within that gaming niche, maintaining their marketing contracts with all sorts of gamers and streamers out there, which is a nice little way to do it, and esports teams and all that sort of stuff. So if you're bullish on gaming, it's definitely one to look into. There are many other companies as well to take a look at too, but I just like Turtle Beach's position of having good amount of cash, a lot of cash flow, and very little debt. So that's a nice place to start. So
Jack, are you into gaming? Are you in that space?
Sort of.
Had you heard of this company before?
I had.
Okay.
I think first I ever heard of them was probably in middle school when one of my buddies had he had like an Xbox. I grew up with PlayStation, and they did not come with headphones, whereas the Xbox did, and it came with the Turtle Beach headphones. I noticed it had this like palm tree logo on the side. I always remembered that. So then when it started looking into stocks, I'm like, wait, I know that companies. And so that was kind of like my intro into it. And I know they did do a lot of gaming gear.
I grew up with PlayStation as well.
Mm-hmm.
And then then I grew up. So, no, I'm kidding.
That's true.
So
don't ever grow up, Jack. Don't ever grow up.
I don't play PlayStation anymore. I mean, frankly, I just don't have the time for it. Or, well, I guess I could make the time for it, but I want to do stuff like YouTube channel and all that stuff. That's my hobby.
You could be the next PewDiePie, right? You could just record yourself gaming and do that.
That would be fun. I have given that thought long term. If I'm like no longer an attorney or something, and I'm just like chilling out for a year, I wouldn't mind streaming a little bit. That'd be fun. Do it for charity or something.
Does this company Turtle Beach? Do they have? Are they like people, like gaming people on Twitch and stuff, like gaming celebrities? Do they have their brand everywhere? Is it like a cool brand? Is it dominant?
I don't know. I'm kind of the wrong person to ask there. I'm not really into that sort of like as a consumer, but I know they do have a lot of top gamers and some esports teams as like chief sponsors, or that they sponsor. And they're constantly trying to renew those contracts and find new ones. So they seem to be pretty in tune with it based on what I've seen in researching the company. That
is like legitimately picking shovels to the video game industry.
Kind of, yeah.
Just accessories to it.
Yeah, it definitely is. It's niche, and they're trying to diversify away from just console headphones was really what they're it's kind of their backbone. They're trying to get more into PC, and not just relying so heavily on consoles, which are a little more cyclical, since we just had, they're doing amazing right now because we just had the PS5 release, and that was huge for sales this last year. Plus we had everyone staying at home, which certainly added fuel to the fire once people got those stimulus checks and all that stuff. So yeah, that's kind of the thesis.
So you're in it and you're thinking about going in more.
Correct. Yeah.
Is it a pretty small position, or?
It's significant. I think relative to my net worth, it's probably close to 10%, maybe like 8%. So it's pretty significant. I always do net worth rather than portfolio size because I have so much debt in the system right now with all the real estate properties. So I try to look at like equity. So yeah, it's pretty significant. It's one of my top 5 stock holdings.
And you're on there on the ground in Chicago. You looking at other things, real estate wise?
Yes. When you stepped out for a second, I was telling Brad that I am looking for more deals right now. I'm actually looking to do a flip potentially. That's chief above my stock picks right now. A flip came up. So I'm trying to make offers once I move in. I was making offers every day before I landed on this property I just closed on. And I think that's the only way I'm going to be able to do it in this market, is continuously making offers at a price that I think is appropriate to make a sizable profit, in a very similar way to buying stocks. The only difference with stocks is you have to wait for the whole market to agree with you on that price before you can buy in. Whereas go ahead.
Oh, I was going to say the other difference is, and I get jealous of this, is banks won't give me 4-to-1 loans. I'm like, hey, do you guys not understand Alibaba dominant position? Like, let's just take a long run approach. Give me that 2%, 3% money, and they never do it. But with real estate, they'll just here it is.
It's because the banks don't hold that loan. They give the loan out. They immediately sell it to Fannie or Freddie or some large investment bank, which packages it up into a mortgage-backed security. They then sell that security to either the Fed, or which has a bottomless pocketbook, or maybe like a pension fund or something like that, whoever needs income. So the bank's never holding it. So it's a very highly subsidized and weird industry. Anyways, that was a bit of a tangent, but that's why they don't do that with stocks. They don't have,
Jack, so are you wanting to wholesale or actually do rehab? Or
no, I don't know. It's kind of for those of you who don't know what wholesaling is, it's where you get a property under contract and then you sell that contract to someone else and then take a premium on the contract. And as a real estate agent, I'm a licensed agent. I'm supposed to be a fiduciary to anyone I'm representing, and I don't know if that kind of toes the line of like brokering without a license. And I don't want that to lead to any sort of sanctions for me as an agent. Every state's going to be a little bit different with whether they allow wholesaling and being able to assign contracts for a fee. But personally, I'd want to do the rehab. Ideally, if I did the rehab and then refinanced out of that to get my money back and just hold the property forever, that would be the ideal. But if that doesn't work too well or the cash flow position isn't great, then I would just sell it take the profit and then roll it into maybe more stocks or even another property. In any event, I'd want to keep building up my stock portfolio so that I could leverage that in the short term to do things like fund rehabs and then cash out and then pay back my margin. That's how I try to use any sort of debt on stocks. You got to be very, very careful with margin though, because of short-term dips. So I don't try to get over leveraged there.
Jack, I'm always jealous of real estate guys because it's just not something, my personality, it's not a good fit for me, but I get jealous of the wealth building possibilities because of the debt there. So
it's leverage.
Can I sneak in a couple questions for you?
Yeah, go ahead.
I was just always so interested in real estate. When you buy these properties and then the plan is to rent them out, are you like a buy and hold forever kind of investor, or are you like a buy and hold and get rent and then sell in a hot market?
No, right now I'm in buy and hold forever mode. I'm always trying to buy something that has a good cash flow position so that there's no pressure to sell in a hot or cold market, really. If I got an amazing offer and I had something that I think I could roll it into, then sure. But really, I'm trying to buy and hold forever, at least until I get in a position where I have enough cash flow to take care of all expenses. So that's kind of the goal.
Second question. For people like me that maybe don't want to deal with tenants, don't want to deal with fixing things, I know there is an industry called property managers. And I think the idea of it is I hire this company, they take part of the rent, and then I never have stress in life again. I suspect maybe it's not like that, but what are your thoughts on property managers?
Turnkey.
Yeah,
management.
turnkey. Do they take too much of the profit to make it work, or do some people successfully do that?
So I do. So yes, property managers are great, but you got to get a good one, and that can take some time, and it won't get rid of all stress forever, of course, because it's still your thing. And it's a lot less work than managing everything yourself. So I have a property in Indianapolis. I live in Chicago. That's something like 3.5 hours away. So I'm not managing that one myself. I have a manager. Okay. They take 10% of the rent roll. But I don't have to do anything pretty much. I spend about 10 minutes a week on it at most. Just if something comes up, I say yes or no. And they have like not on-site, but they have like their own in-house maintenance crew and that sort of stuff. So that takes a lot of stress off. Generally, what you want to have before you get into any deal is you want to have contacts, whether that's having a property manager, good agent, some contractors, or at least someone who could refer you to good contractors, lenders. You just want to have that team ready to go because it is a team sport, at least if you're trying to scale a real estate portfolio. You could do a lot yourself, and you could make that 10% back yourself if you want to make that kind of your job. But property management is quite stressful at times. It's customer service, and not everyone's built for that.
And maybe they roll this into their business models and it's a scale thing. But I always wonder, like, okay, if I go buy a rental property and then say the revenue is $1,000 a month in rent, is this company really going to be there for me for just $100 a month? Like, is that interesting to them? Just if I come to them with one property as my property manager?
So yeah, they're not going to give you like the royal treatment if you're just like a little small fish with one unit that'll make them maybe $100 a month. But granted, when you're taking like an individual property, they're going to have a portfolio of properties that they're already managing. So it's kind of expected at some point. And that's where you gotta have to find a delicate balance of, all right, what kind of properties is this team managing? Do they have a team? Is it just one person solo? It'll depend there on what kind of individualized treatment you get. But typically, they're going to have multiple properties. If you can bring them a bunch, they're going to prioritize you because you're a big part of their salary, obviously. So scale helps in everything, pretty much.
And just one little question on that, Jack. Do you have that property in Indianapolis in like a self-directed IRA or some crazy?
No, nope. It's so the way I have it set up is my wife and I have like an umbrella LLC. So it's like a company that owns any property level LLCs under it. So I have two LLCs basically. I own the top one, or I'm like the chief member of it. My wife's the other member, and then that LLC owns the Indianapolis LLC, which owns the property. So technically, it's just an entity that owns the property. There's no people in it technically. It's a very goofy thing that you can do, but that allows me to be able to section off the real estate business. So if something goes wrong on one property, it's all contained or should be contained within that one LLC. And also I could sell off the property level ones more easily. I could just sell the entity if someone wants to take a share of it or something like that. Or if I want to do a partnership. So
covering your assets, right?
yes, exactly. It's a little expensive to set up at first, so you want to be sure you're going to scale, which I'm obviously trying to do. So yeah, that was a big real estate tangent. I hope that was okay with everyone.
So real quick, a book that I'm reading, The Almanac of Naval Ravikant. It's fantastic. Just it's not about investing; it's more life philosophy. But
we'll get into some questions real quick. But yeah, since Jason, you got a stack back there.
Jason, pick your favorite right now.
He's thinking about it.
I like a book I haven't read yet. It's down here. It's called The Complete Financial History of Berkshire Hathaway. I know that I think his name's Adam Mead. He's kind of been making the rounds, I think, on podcasts, and I just heard about this book recently. The reason I'm going to call it out here is just because I think he went deep into the history of Berkshire Hathaway financials, and that's always something that's on my mind. There's another really good book that someone wrote about like the investments of Berkshire Hathaway or Warren Buffett, where a guy kind of did a case study on like 10 or 11 of Buffett's investments, like American Express, stuff like that. And you hear about Buffett like buying Geico, buying American Express, buying See's Candies, the operating companies. And then all these companies that kind of get lost in the shuffle these days that we don't hear much about, but still make up Berkshire Hathaway. And at the time were bigger deals to him. I always want to know, like, you know, I want to get a feel for like, what was he buying? What attracted to him to a candy retailing company, or what attracted him to a furniture store? And I want to dig into those financials, look at the debt on the books, look at the growth, look the prices he paid for it. And I think that book does that. So it's one of those books where you hear about all these other books, and this one, I think, to me, it's gone a little bit under the radar for how much work has gone into it. And it's definitely one of those books you want to get in physical copy as opposed to digital, just because there's so much like numbers and stuff. So I haven't gotten to it yet, but I'm really excited to get to that one and dig into it.
Yeah. On that note, I found Adam Mead is very accessible, both on Twitter and LinkedIn. If you have, questions that come up as you're reading, I'm sure he's happy to take those questions.
LinkedIn is criminally underrated, I must say, for being able to connect with folks. Not that it's amazing, but but it is underrated, I will say.
Okay.
Jack, you got time to read these days?
Yeah,
or you
hardly,
got too much going on?
Hardly, but I am reading the book on estimating rehab costs by Jay Scott over at the Bigger Pockets team. Bigger Pockets has a suite of really good real estate books. I've read a couple thus far, and since I'm in my rehab mode, it's actually been a pretty good. It's kind of like a framework book on how to quickly estimate rehab costs, just like the title suggests.
Yeah.
And have kind of a ballpark going in, which is really the toughest part, is making your hypothesis going into the deal and figuring out your worst case and best case scenarios for rehab costs. Yeah.
Sounds very practical for you right now, Jack.
Yes, I always try to keep the books practical, always, because I don't have a ton of time to read them because I'm reading all day for work. So reading contracts and drafting and all that good stuff.
Cool.
All right, let's get into some of these questions. I know Frank was in here.
Yeah, he was asking about Nintendo, if anyone has looked at Nintendo.
Frank's pick, Nintendo. He did put out a really great kind of overview video recently going over Nintendo's position, their balance sheet, and kind of the thesis with Nintendo. So go check that out after this video, after we end the stream in a little bit.
Don't cut out early, people. We're watching.
Go check that one out. I'm assuming all of you've already watched it, as you should. Be sure to subscribe to all of us. Go give Jason a subscribe as well over the After Dinner Investor while you're at it. We have all of our channels in the description below. But anyways, Nintendo, what are you guys' thoughts?
I'm going to hand that off to Brad.
No thoughts.
I've never dug into Nintendo. I see it come up every now and then in value circles. But it's outside my wheelhouse.
The number one thing that hits me when I hear Nintendo is that my first instinct is, okay, am I going to get a 10 bagger there? No, because everyone knows about Nintendo. I could be wrong. It could be worth looking into. I'm going to watch Frank's video there, but that's my initial gut instinct, is that it's just it seems like too known. And the reason I say that is like on CNBC business websites and all that stuff, I seem to always hear about Nintendo and the business of Nintendo. So that's my first instinct. I also would bet that they don't have any net debt, or they have a really good cash position just because
they have a lot
they're
of cash.
Japanese. Is that correct?
Yep.
Yeah, they do. Mm-hmm.
Yeah. So maybe something interesting, but I don't know. I'd be interested to see if there's a hidden gem there, or if everyone's onto it already.
Yeah, I don't think I have much else to add there. I mean, Frank's video was fairly comprehensive. It was brief but comprehensive, as he often.
Tell you what, though, it's no Kelly Partners either. That's what I know.
No, it's not. That's Frank's big winner.
I will say, I just looked at the the acquirer's multiple for Nintendo. It's below 8, which is pretty interesting. Obviously, we need more to go on than that, but it seems pretty cheap at the moment.
One thing Frank pointed out is that the business is very cyclical. I didn't realize it was as cyclical as it was because of their console sales mainly. Right. When new consoles come out, they'll have a spike, and when they're kind of in a lull between consoles, they won't see as much. But they're almost at a point where they're having this cash drag because there's just so much cash in the balance sheet, not really doing anything. If they start doing buybacks, then it could get really enticing. That was one thing Frank pointed out. So it's definitely worth looking into if you're interested in that space, in the gaming space, or if you like Nintendo, as a lot of people do. Definitely worth looking into for sure, especially if you're trying to avoid those highly leveraged, indebted companies, of which there are many. Let's get to some of these other.
And Sandeep is very bullish on Nintendo, it appears. So get in touch with him if you're interested as well.
Yeah, I see that he's was up at the top of the chat. But,
I can tell, Sandeep.
Yeah, here's one from Manu. Do each of you average down when buying, or have a clear target for allocation to each stock? Well, that also assumes that the stock goes down after you buy it, which you can never really guess if that's actually going to happen.
No.
Maybe.
Yeah, I guess it's tricky. So there's different approaches, right? You can either kind of slowly buy into something, or if you have high conviction right away, you plow everything in, and then it starts dropping, and you're kicking yourself a little bit. But this kind of depends on your approach for the stock in question.
I think it kind of depends to that. It kind of depends on the margin you're working with, the margin of safety. If it's like a really fat margin of safety, yeah, dive in, like build the big part of the position right away. But if it's like kind of closer to that fair value point, I might put out kind of like a feeler position, like a little bit in, and then if it drops from there, be like, all right, we're going in, just to kind of build that. It's, what do you call it? It's like forced to pay attention on that stock once you have a position in it, if it's kind of in your range, and that way, if it falls deeper into the range, you go for it, take your big swing. That's kind of. So it kind of depends on the current price is really what I'm saying.
Where are you on averaging down, Jason?
Well, I've heard his name's Tim, I think, Investing with Tim. He's usually on here. I think I've heard him talk about that. And when he talked about it, that's where I heard of it. And investing, averaging down, it's nice when the stock goes down. Like if you have a pile of money and you want to buy that stock, and you don't spend all your money on the stock that you have allocated to it. You wait until it goes down. It's nice when it goes down. But if you listen to Buffett, and we think no one can predict what the market's going to do day to day, to me, there's no guarantee that it's going to go down. It could go up, and you could miss out, and then you're averaging up, which is a bad thing. So when I want something, I go after it with the money I have available to allocate to it. I never really just hold back and don't go for whatever position I want to go for, because if I want to go into something, it has to be attractive at that price. I can't bank on it going down. That's like a portfolio perspective. So I have that after dinner investor portfolio that's a fixed amount of money that I track. And when that happens, I go in with whatever I want to allocate. And if it does happen to drop, I might sell other stuff, or if I still have cash, I might buy more. But then in like real life, where I have money coming in all the time, I do go. I do find myself buying more of a stock. So like Alibaba, I bought a lot, like 12%. If it keeps going down and I have money continuing to come in, I'll probably still buy more of it. But then if it had gone up, like it's gone down, if it had gone up, I would probably hold off. So it kind of just depends on each situation. But I never do this, if I'm understanding it correctly, I never do the holding back and then thinking something's could go down and buy more.
Sure.
I don't agree with that one.
Mm-hmm.
Yeah, you don't want it to become market timing, where you're just like, oh, I have a feeling it might go down in the next week. Like you can never really tell that, down or up.
Yeah.
Unless you're a necromancer. You got some love in the chat, Jason. That's what After Dinner Investor looks like. check out After Dinner's podcast. After Dinner Woohoo.
Nice. Yeah.
They're
Usually I'm
glad
in
to
the
see you in
chat.
person. What a supportive crowd we have here.
Beautiful.
Let's see.
I saw a question in there about Intel. And
Where
I'm trying to see who.
There were a few.
Okay, Brent was asking about anybody looked into it. It was the largest position that we saw in Seth Klarman's portfolio last quarter, Q1, and they had bought in Q4 and Q1. And so I looked into it, and I watched a couple of Swen Carlin videos on YouTube, and it did not strike me as something I wanted to get involved with. Number one, I could get it into my circle of competence, but it would like take a ton of work, and it's just not something I'm naturally kind of interested in. And then it does seem like there's going to be a ton of money being spent on capital spending and invested at that company. And I know they have I know there's big moats to that industry, but I know there's very, very big competitors out there, like the big company out of Taiwan. And then I hear things about Google and Apple making chips for their own phones, like making their own chips. And possibly, if I understand it correctly, replacing some of the money they spent with Intel. So it just did not look at it. It looked in the sense like, okay, if everything works out great, the stock's going to go up. But comparing that to other things, I didn't want to have to go through that process with that company. So I passed, and then I see here in Q2, I think Seth Klarman sold some Intel, if I'm not mistaken.
7%, yeah.
Yeah, so it didn't really attract me. Has it crossed your radar yet?
That's actually very similar to my feelings on it as well. So I don't really have much else to add. It's like, if you look at the whole industry, it's like, is that really the one you're going to pick? And yeah, it's kind of like, if everything goes right, then it's great. But if even just a few things go wrong, it doesn't really look that great, at least in my view. Depends on how bullish you are on Intel.
It seems like from what I was reading, there's a bit of a turnaround hope for
Right.
Intel in the investment thesis, and it's hard for me to get behind that, to be honest.
It's a big uphill battle, it seems like, or at least the hill is getting steeper every day. It's what it kind of seems like, in a weird way.
And one beautiful thing about investing and having all these pitches coming at you, as Buffett says, or opportunities, as like a businessman, I know what business is like. I know what turnarounds are like, and it's stressful. And one thing with investing, I always remind myself, like, hey, I don't have to go through that with them. Like, that's their problem, not mine. I can sit here and wait for the easier ones. And you mentioned the word feeling, Jack. You had the same feelings on it. For me, it was kind of a gut feel thing. Like, I could make the rationalization, like, hey, it's going to turn around. It's debt's not a problem, blah, blah, blah. If it's not, but it could be safe with some upside. I can make that argument, but I had this feeling of like, no, I don't want to be here 2-3 years from now flat and watching the market go up and into something and then have an anchor problem with it. So it was a feeling thing. Yeah.
Here's actually a question for you, Jason. A good one from SE358. Old reliable here with always bringing us some good questions. After Dinner Investor, when you make pure clone investments, do you have a rules-based framework for that approach? You were mentioning cloning pretty heavily with your leading off with races, for example, and others. Do you have sort of like a filter system with that?
I do have a lot. So the first one with cloning is if I'm taking money that I work hard for and putting it into businesses, I have like a little checklist thing, and one of the first things on the checklist, like, is this a clone of a super investor? And if it's not, I better have like a damn good reason of why I'm getting into this, because these guys are obviously way better than me. Maybe I'll be as good as them one day, but right now they're the pros. And so my general rule is like, I generally want to be cloning. And then from there, if it's a clone that I do work on and understand and feel comfortable with, then I go into it as big as I want. If it's a clone where I have no idea what's going on, but I just want to get involved with it and be part of and potentially really clone it, what I do is I go in 1 to 3%, like on this Change Healthcare or Cardlytics, 1 to 3%, just because I have a lot going on, and just because when the 13Fs come out, I'm focused on it. And so I do my research of where the price has been, and if it looks like something I want to get into, I go into it with a small bet, and I use that to kind of motivate me to put a lot of work in to figure out if I want to do a bigger bet. And if I end up not, I either just hold it and watch the super investor, or I just get rid of it when I want to buy something else. And then the other kind of rule is that I like to buy within 30% of the low of the quarter they bought it in. So if a stock sells for, if the low was $100 and now it's selling for 150, I'm going to go, no, I missed it. They probably didn't, but potentially they bought it for a low during the quarter of 100. If I'm buying it for 150, they've already had a 50% gain. I'm behind the curve there. But if it's within a 30% from the low, like they could have bought it for 100 during the quarter. By the time I see the 13F, it's at 130 or below. Then I go, okay, that's within my realm where I'm allowed to do it. I make exceptions there. But generally I look for that. I want to buy it within 30% of what my super investors bought it for. And a lot of times we get lucky with, like, Alibaba is selling for less than they bought it for. Micron is selling for less than the low when Seth Klarman bought more last quarter. But I am open to buying it when it's gone up. I just want to be within that 30% threshold. But like all things with investing, it's a soft rule, but it is a rule that I follow. So that's kind of my framework on cloning.
That sounds fairly similar to Brad's approach, at least with how you have very stringent filters on how you'll get your idea from wherever, usually from a super investor or elsewhere, and then you kind of filter it from there, which makes sense, since every person's risk tolerance is different. Since you can't clone conviction, or it doesn't Monish Prabhai say that? Whoever says that, that's a good way to put it. Moving through some comments, we'll get a couple more in before we wrap up here. When we were talking about real estate, I was describing mortgage-backed securities. Some smaller banks do hold on to mortgages, so I was being pretty general. I'm really talking about kind of what happens most often. That's what happens with mortgages. But occasionally banks do keep them on their balance sheet. So don't take that as like doctrine that that's only what happens. We got the books question, another one on real estate, since we went on for a while. So for the flip, it would probably be something like a hard money loan for probably like a 12-month term. So it would be short term, but I would have other debt to pull from in an emergency to cover that if I needed to. So that's kind of what I'm thinking there, is I would use something like a hard money loan, which is usually shorter term leverage, but being careful to always have reserves and the ability to like pay it off immediately if I needed to in an absolute emergency. You can never be too safe with debt, I suppose. That's kind of what I was thinking there.
Couple some ones that one that I own that I'm seriously, like, it's been kind of, I've been thinking about it a lot this week, is Cerritage. I think I'm in there for maybe a 12% bet or possibly 15%. But that price has come down in the last few weeks, and it is sitting at $15 and change. And that's always kind of been, ever since I watched your video, Brad, with Tim on the kind of deep dive into Cerritage. If my memory serves correct, your guys' kind of basement, what it was worth today, was it around like $15 or $16 a share in terms of like margin of safety, what it could be worth on the low end?
think it was around 17.
Okay, and now we're at 15. So ever since I watched that video, it's always been 15's always been my number. We're there now, and so I haven't increased my bet at this point because I'm still trying to get my with that company. I really want to get a good feel for it, and I also want to see the story kind of keep playing out. But when you see Cerritage at 15, Brad, do you look at getting back in there or going in heavier, or do you just kind of set it and forget it?
Yeah, that was a set and forget for me. I got in.
It takes a lot of discipline to do what you do.
Or laziness. I got in around
from the outside, yeah.
around $10, and it's just like, okay, I'm gonna basically not look much at this for 5 years, 10 years, and see what happens. So,
Brad, I got to say, you went away in the last few weeks on YouTube. I was a worse investor during that time period because you weren't there for us. Like your videos they're so good at like just making you think about things like that. 5 years and you actually believe it. Like you can tell you just believe the long term, you believe the heavy bets, the wonderful businesses. So yeah, it's good to have you back.
Yeah, we missed you, Brad.
Well,
bring a tear to my eye.
Thank you. I'm happy to be back. It was
and Brad, I don't know if did you make an announcement somewhere? Did you tell people you were going away? Because you were just boom every day YouTube videos. I'm like, where is this guy?
Out of here. And it's funny, my wife, she mentioned, did you mention that you were going on this trip? Huh. No, I just kind of dropped
the community tab is for. Come on, Brad, make a post.
Yeah, you had some
something.
Well, it was sweet. It was sweet. Some of the messages I got because I didn't make that announcement. So. But I'm back.
You just back. You like making the people sweat a little, and then
right.
You see who's really loyal.
That's right. Exactly.
It's good to have you back, Brad, for sure.
Yeah, it's good to be back.
Anything else you want to close up on? I think we addressed a lot of questions, and others some we didn't get to, but we're all running over an hour 15 now.
Well, one more question for Brad. What does it take for you? It sounds like you have very firm positions, very large positions, very long-term positions. When's the last time you were tempted to sell something, to buy something else? Does that happen to you, or what's it going to take? I'm trying to, is it just kind of when something comes across, you'll know it when you see it?
Yeah.
It's not, and am I right? Do you have a really high bar in terms of like making a change?
Yeah, I think I have a pretty high bar. I mean, to just put it into context, I really started kind of the five stock framework back in 2019. When I first bought Micron, and I've really only made 3 high conviction bets. So I'm still waiting. I want 2 more. I don't have enough ideas right now, enough high conviction ideas. So
if you could get your hands on Rehab, would you do it?
Yes.
Would you do it big, like one of these 5?
It'd be one of the 5.
Jack, would you go in with us? 20%?
It depends on how easy it is to get in, I suppose. I'd want to take a closer look at the actual properties, though, like the actual balance sheet.
Cool. Yeah, we'll kick the tires if it comes to that.
Yeah, if you can get to it, let me know. And then I haven't even bothered looking into it just because, like, I don't even know how I'd get it. So
I know a guy. I know a guy in Turkey who can take us around. So
yes, take a tour, take a quick trip. Here's a good little quick question to wrap up on.
Okay.
You had to give up picking stocks forever. Which index or indices are you setting and forgetting into? I would probably do total world, not S&P, just everything. That'd probably be what I'd do if that was my only choice and I couldn't change after that or something like that. Just buy the basket, bet on human innovation and growth, and hope it doesn't go too terribly. That would probably be what I'd do. Not advice, of course, since that's not actually how it is, but that'd be my knee-jerk reaction.
For me, it would be S&P.
S&P 500.
Yeah.
That would be number 2 if I had to pick a couple.
I'm not going to go against Buffett. You got to bet on America, right?
Yeah, I was going to say,
if I'm diversifying already, I just wanted like a max diversification. Just get the whole world.
I'd probably do S&P 500 too. But what sitting here today with Buffett in his 90s, what would you guys do? Would you if you had to put all your money in one of two things, would you do S&P 500 or would you do Berkshire Hathaway stock? Forever.
It's hard to bet on one company forever. I granted it's like really more of a hedge fund at this point, but
And you know, one of the factors is it lump sum all up front, or is
all
Yeah,
up
that's
front?
true.
All up
Yeah.
front.
if it's all up
forever.
front, I'd rather just have the whole world. I don't, if I can't diversify after that or change out of it, I don't want to put it all in one company where I can't even change my mind, because there's going to be some probably pretty fundamental changes in the next decade, I'd bet. But we'll see. What
Yeah,
actually
I'd
happens.
still go with the S&P.
Yeah.
Yeah, I would too. It
If
would
you had
be
one
too
choice.
risky to never be able to judge it or get out of it or anything. Just
Yeah.
it's too many unknowns with what would happen with
Yeah.
them for decades.
Good hypo. I like it. Alrighty. That was a good one. Thanks for coming on, Jason. This was great.
Yeah, thanks, Jason. Great to have you.
Well, it was a dream come true. You guys
Yes,
have
the king of the chat.
you have
now a full member.
well, as I said in the chat one time, someone said, "Oh, I got to go on there." I said I would never break up the Spice Girls. So the five of you, when all five show up, I don't know where Tim is tonight, but when all five of you show up,
Tim,
you guys have the magic. But if you got room for the sixth man, I'm here anytime you guys need me.
you're on the roster, so we'll let you know, Jason. Otherwise, everyone check out Jason's channel if you haven't already, After Dinner Investor, talking all things investing. So go check him out there. Otherwise, if you liked this video at all, or even if you didn't like it that much, but maybe you're thinking about liking it, just smash the like button anyways. It helps the channel out, and it'll help the algorithm push this to more people interested in investing and value investing. And smash that subscribe button while you're down there if you haven't already, so don't miss next week's episode. Again, we'll probably be diving into all the 13 Fs that'll be out by then and getting a nice deep dive there. So that'll be good for more investing ideas and kind of getting a lay of the value investing super investor landscape. So be sure to stay tuned for that, and check out the Discord in the description below. We get some good conversations going on over there pretty much daily now, so it's great to see that that's getting nice and active. But otherwise, until next time, everyone, see ya.